that should start in the second round. That's how it is. If it doesn't, there's nothing I can do about it. I'm not the sharpest in the bread when it comes to that software. Stand around and pass it. It's kind of weird that it's 10 minutes. I still don't know how to use most of it. And there's a General Electric. Like I said, it's going to be a no. The premiums are usually crappy. That's how the premium is. The then 56 cents is, then 57, but then 30, yeah, not quite good enough to 1%. Usually not the bad, but it really good for companies. There's a few of them you'll notice that they're very good at 1%. But the then 56 cents is, the 55 to the 57, that is in that, that's then 57, then there's kind of after that, and then 20, that's like 0.75. But the 0.75 is not that bad if you think about it. So let's do the actual math. See if it has it. Bob, I'm doing good. Thank you for asking about it and decided it. I had a nice day after it, measured another day after. 55 then. And I did. I have no idea. How accurate are the futures to predict the price direction and probability? As residents, actually the conversation for different threats. Okay? It's like anything else. Okay? Futures are basically you're putting money up front for something that might happen. Now, so people like you and me, investors, it's pure speculation. But for companies such as Procter & Gamble, who needs raw materials, for people, they need raw materials, but they sell raw materials, and wood, cement, that kind of stuff. And then you have, not just the most, but Procter & Gamble, Colgate, Palmolive, the companies that are consistently buying and selling Post, General Mills, because they need raw materials. So, if they come in every single month, said, good, this is it, sugar's very good, I said, 50 contracts, 100 contracts, 1,000 contracts, it doesn't about consistently. Now, they're actually saying, hey, this is what it is now, this is what it's going to do. Okay, so then a lot of different factors come in. Reddit tracks come in, supplies chains come in, a lot of different factors that pull the raw materials. So that's basically what futures are. It's the raw materials. Because manufacturers take the raw materials and they make something out of it and they sell it. So you have certain companies buying sugar every single month. They buy flour every single month. They buy lumber every single month. Aluminum, steel, birds. Certain manufacturers need these products in order to fulfill the product line on a consistent basis. But the cost keeps changing week after week after week, which means the futures keep changing week after week after week. But then General Mills said, yep, I take 50 contracts of this for this next date. Next month date, I take 50 contracts of this month. So you can also trade stocks with futures. That's what I thought percentages. Now, they used to have this called single stock futures. Now, that was freaking cool. It didn't catch on, so they didn't do it any longer. So she used to be able to buy futures on AT&T, Apple, General Motors, big companies, big. So you could buy futures on Apple, which is great, because the futures price contract is a heck of a lot less than the stock price. It's kind of like a calendar spread. You can buy an option really that in the future spread, but it's inexpensive amount, and then you can cross margin it. So you can do a futures contract with a stock contract, cross margin and get a nice return. It didn't catch on very well. It was a huge amount of money that was delivered on a weekly basis. Didn't catch on, so there's not a listen to the stock futures. What are the thoughts on strategies? Purpose and brands at food. I like it. But not here, not on this platform, not with this particular strategy, also in this particular yet, same thing. Okay? But the reason that I don't do strategy standards and all kind of mostly fun stuff here, it's not simple. Seriously, not simple. So, just to clarify, this crazy platform, that I'm teaching here now, is the exact same thing I was teaching 15 years ago. Nothing has changed. I'm not adding anything to it. I'm not taking anything away from it. It has to be simple. It has to be safe, predictable, consistent status or not. Okay? There's a lot of working parts in the standard. But keep my mind that is to be simple. If it's a good stock and that's coming to dividend, then it comes through the bill. Now, after we have some stock that is priced when the stock moves at a certain time, we cross reference it with the dividend, and then everything that's that nice that says. When you see EBR is part of the dividend out of standard, good. Like EBR, that means that it's on the highlights because it's my personal list. So I looked at it. 2 is the third, this is the third. Did I like it? And I missed another option. Good. I about it. That's another list I on my list. Number 2 is that dividend coming out. So it's a high list that is past started part 2 and whether or not I like it or not. Good. I got it. This, the numbers there. Have you tried the footprint service strategy? Isn't it? I've never heard of it. Now, I thought that it was positive, not positive, and ingredients in it has something to do with stock price, that's number 1. Does it have to do with the dividend? Okay? That's comment, other comments and stuff. Things my people in. So the footprint, I've never heard of it, so I can't really help you out about it. But I'm sure there's some parameters in there that needs to happen. Now, I like simplicity. I like something simple, I like something simple, I like something predictable. Now, I do this thing, I do this, I like something, it has to be simple, so it's the consistent matters to lose. That's the 5 criteria I had to meet. So, it's a method, never buy something you don't know for a long time. Never sell it at all. Never says 10 years of increased dividends, never says weekly after dividend, never says another this. So it's 2 this, under this, that's what it is, it's that. Put it into calendar, then it's paying the dividend. Good, that's when I look at them. I don't know if they're not paying the dividend. Then, I don't shoot. Then I buy it for, then I sell it for, then I make another 1%. So, after that, there's the track calendar. There's the hardware, there's the flow down, okay, and then, make the election. There are 60 days, so there's that. There's that next. That is it. That's the bottom. Okay? There's the bottom of it. It's a blue bed. It's in the bottom. I have 2 days to the positive side after the bottom. So this is the bottom here. So I then take a look and I move to this. That's how I jump in. YouTube touch thing this now. Yes, that is different. Live and new to the profile to this. Alright, method. So I defined it. So as I'm saying is, first thing I look at is, are they consistent with the dividends? Next, when are they paying the dividends? I haven't been improved before. It's really not that difficult because the master's good. Let's try to do it. I did it the 15th. That's it. Good. So that's good. The 17th. 2 weeks before. Okay, so that's it. Time my heart, time pass, and that's down my limits. That's how I look at that. I'm going to look at that, then stop this week. So, I'm going to restart it out here from that particular list. Now, I have about 6 or 7 lists. So, if I don't find them good, then I open my 5 box. My 5 box and companies, I like to buy it every week because they're consistent with doing the good things. That's who it is. So, now, I use that with America, Macy's, Nordstrom's, Curves, Langley's, QS, those comes consistent with doing decent things. So that is not about it. As long as everything looks like, as long as everything looks like and consistently confident, that is not good. Right? There's 11, that's 35 minutes. Alright. Next on the list. I have some curves for you. Special price. That's a little curve, that's it. Curve, that's it. Now, out of curiosity there, Mr. Abbott, what did you drop in on the curve? So I have curves too. I have curves at 25.39. Yeah. Okay, so I'm kind of in the same boat you are. But I have curves. And curve is consistent with doing with the 1%. So they're not. So first thing I want to look at, then, is about 27. Okay, so I'm in the curve at 25.50. So I don't know that I'm really at 27, but here, it is what it is. Huh. You didn't verify that as that? Let's take a look at the numbers. First thing I want to look at. 2160. The 2160 is a move. That's better than 2%. Okay, that's great. But, as Albert said at 27, I'm at 25 and a half. That's at 71. My pose is at 24.80. I'd set the code, then the same good. Now, red, and then eventually, and then down it. So let's put that to the exact numbers. Okay, first thing we want to do. Look at the high. 4 times. That's a quadruple high. But it's 4 times. July, December, March. So it's twice in December. So that's resistance. It just doesn't seem to have been past 79.50. That 79.50 is the high at the hit it 4 times. So at the bottom, that's it. It starts in October. Okay? Now, let's take a look at those numbers and see what they say. I will go 2032. Our high is 79.65, we hit it 4 times. October hit twice at 17.76, the last 90 days. Okay, 90 days there, take a look. Come down to that, down, but this had no direction here to that. Up in the side, that's down. Okay, so if you're going to keep coming down, that's the point in the bottom. So, if you find that down, then that's a minute. Until then, you can keep that on. Pillars is one of those companies I keep my eye on every single week. No. That's what it's consistently talking about. No, I'm into the 25, 50. So, here's the last 30 days. 30 days there, 26. So that 30 days high, 27, 50. Okay? I'm into it 25, 50. That's it. That's what I'm at. And that's what I'm at, coming up. So I have to add a sign of this thing. Yeah, I did. I originally got in at 76. So that's 26.32, which is at 76, which is the same place that Albert got in. Albert, you got in right around here. So when she dropped down to the 26, she dropped down to here, she goes to the left side, that's where I jumped in. That's it, 26. A little bit I wanted to come back down, and that's not really to say. Between the 27 and the 23, my average cost is at 75.50. It's easier to get rid of than average. Average is at 77. So that first pair you suggest saying a Monday. Now I set the period. I'm looking at, I'm probably going to do the 23s. 22 and a half. I don't know that. Just turn down Monday. Okay? But I'm only going to set something invested so I have the cost there. I don't have the cost coming in. I don't want to lose. I don't go at the 20. I do the 22 and a half, which is right here, and if it's going down, good, I make money. But if she finds the bottom here, turns around, then I lose money. So I'm going to lose until Monday until she opens up. If she opens up red, I'll set it 22 and a half. If she opens up green, I lose. Maybe I set it 22 and 26. So I'm definitely saying something against it. Alright, that's it. 3M is next on our list. 1, 2, 3. 3M had a lot of turnaround. That's it. That. Because 3M was a dividend paying. They paid dividends every single year and increased every single year. They know what Adam Pitt is watching. They know it. That's them. And that's the other bit. Lewis. Over there. That is. That is you too. um, so it says, please explain that cost averaging set it. Otherwise, I'm trying to understand that cost averaging. If I buy 1,000 shares, I buy 100 shares at $100, and that's the high. And then she drops down here to -7, and I buy another 100 shares. I combine the two together, so now I have 200 shares smack down in the middle. That make sense? Let me go back to curves. So, I got some shares at 26.82. That's a more shares at 22.27. So, 26.82, 22.27. So that's in here, and that's in here. The cost averaging goes into the middle. This is the same as the test. It's not that it's 26 times 7, so that's 22, but somewhere in there, it's the same. Choose the set averaging at 25, then the set it into 22, and it is set it into 26. So the cost averaging, that's the post down. The total of averaging put together. Okay? Now, I could still set something at 22, I could still set something at 26. But I don't have to add them back down the time. I don't have to down, set under the profit, throw that and set it for something else. That being said, we're talking about 2M. 2M, like I said, do you really want to be the CEO that comes into 2M? Because 100% confident and says, you know what, we had it this year, we got to pay our dividends, 67 years of increased dividends every single year, higher and higher and higher and higher. And this then comes into that confidence, let's pay our dividends. Now this cash after the dividend business, you've got to live another 50 years to bet on that list. That's what I'm saying about that list there. That is the thing at the top. But it is. You can't get any better than a company that's over 100 years old and consistently gives their investors more and more money every single year. That's what most companies strive for. They're having kind of dividend print. They've got a consistent increase in dividends for 5 decades in order to get on that list. So 3M is on that list. 67 years of increased dividends, and they said, let's cut the dividends. No, you don't do that. You get the whole company together. So look, this is where we are. This is cut our dividends a lot, and our investors have been trying to sit and go somewhere else. Third, even after the pay cut, give the dividends to our investors and keep on them as a dividend cut. But no, then they decided to cut the dividends, to pass out the dividend contest, and now they start out of that. Simone said if I have curves at 26, you can't say to pass at 6. Actually, you can. It's the back two curves. Curve SS. That is Adam, the 26s. Yeah, unfortunately, this week's 26s are going to 0. It's simply to put it. So you can do this week's. So what's next week's 26s look like? Nothing for that either. So that's 3 weeks. Nothing. There's something there. Because it's 0 to 31, and it's usually somewhere in the middle. So you can get something, you just don't know what it is. Because right now, there's 295 contracts open. That means there is some value there at the 26, for 3 weeks out. 2 weeks out, the 26 is left. So 2 weeks out, there's something in the also. 295 contracts, which is, if we do this here, okay, between 16 and 31. That's what the past end said. So if you understand that, you can get between 16 and 31. So, sure. That's the better. Those people teaching us that we on options I don't even know you could say. You can. The further away from the spread, the less you should. But he's right. So, you have a couple of choices. Option one. Choice number one. Choice number one, you said you don't want to do. 26ers for this week. I'm going between the 4 cents and 8 cents a share. So if you decided at 4 cents, if you wanted to, that's corresponding at 4 cents per share. You have 100 shares at $4. You have 200 shares at $3. 1,000 shares at $30. So on and so forth. It's 4 cents per share. You can put that on Monday, so this is I want the limit, I want 5 cents a share, I want 10 cents a share. It may hurt, it may not. Now, that's the issue. Right? Next week, totally different, same thing. Okay? This is 16 and 31. The number's there.
It's going to be. And then you tell the market maker, this is what I want. He's going to say yes, he's going to say no, one or the other. Okay, but the other option you have is dollar cost averaging. So if you're in it at 26, way up here, and right now it's at 21.58. Okay, so if you have 100 shares at 26, and you buy another 100 shares at 21, you're going to meet in the middle at 24.50. Okay, and then at 24.50, you actually have a decent price to be able to sell, to get something in. Something is better enough. I come back to the my cow analogy. Okay, a lot of you have heard this before, some of you haven't. If I have a cow, my cow gives me 1 gallon of milk every milk. Great, I'm happy. What happens if my cow gives me a half a gallon? Do I get rid of it? No. Okay, so after a couple of weeks, couple of months, my cow only gives me a quart or a pint. Do I get rid of it? No. If the stock price goes down, you can decrease your the premium that you collect, and you're collecting something. Remember, most people buy stocks to collect 4 dividends in a year. That's once every 90 days. Okay, so great. So while you're waiting your 90 days to collect your dividend, why not collect a premium? Okay, so the premium is not going to be as high as it was the very first time you do it. It goes down a little bit. But here's the thing. If I'm buying, let's say, STX, and I'm collecting like 2 weeks before, so STX is here on the 20th, I want to get it on the 3rd. So I get a premium here. Great. I hit my target, I don't hit my target, one or the other. Okay, premium here, a premium here, and a dividend here. So it's premium, 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 dividend. Most people just buy to get a dividend once per 90 days. Now, if you change up a little bit, okay, if you change it up a little bit, okay, and you get premium, premium, dividend, premium, 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 dividend, you can increase your rate of return. Now, I do this, not a problem, okay. So I do this every single day. I do it twice a day. Not that I want to do it twice a day, it just so happens to happen that way. Okay, I do a private trading group in the morning, 9 to 10, 11, whenever we're done. Okay, just before the market opens, because we want to make sure we get in a good price and make sure we get that consistent, predictable 1% per week. That's what we're looking for. Okay, once we get that, great. Tuesday, Wednesday, Thursday, not a whole heck of a lot happens, but what are we looking for? Well, we're looking for where our position is. Okay, here's our position, AEO. Okay, where are we at? Okay, that's where we're at. Great. BITO, where are we at? Okay, that's where we're at, so on and so forth. Okay, and then we want to find out where is the best place for our dollar to get the most coming in, consistently and predictably. That's what we're looking for. That's why we do it live every Monday, Tuesday, Wednesday, Thursday, Fridays at 4 o'clock, because we want to make sure we right or wrong and set us up again for next week. It only takes 10 to 15 minutes, and once you get it, it's like, oh, that is so easy. Alright, so next one on the list, 3M. We're looking at 3M. Now remember, we're talking about 3M and the bonehead CEO who decides to cut the dividends. Okay, so after 67 years, he decides to cut the dividends. Now he's starting off at ground zero, and here we are. So, first thing I want to look at. Number one, I still like 3M. I do. They're over 100 years old. Yeah, they ran into a minor issue and they had to dish out a big fat chunk of change to cover some lawsuit for whatever reason. Alright? I'm not a big lawsuit fan. You know, if you come and you stub your toe, whose fault is that? That's your own damn fault for stubbing your toe. Alright? Alright. 101. That's what I can buy it for. Not the right one. Because we have two. Alright, yeah, it's not that one. It's this one. Alright. 101. 101, I can get for 106. That is over 1%. Great. That's what I'm looking for. I know who 3M is. They've been in business for 100 years. Okay, they consistently increase their dividends up until Brainwave decided to cut the dividends because he didn't want to take a pay cut and say, hey, let's think of the investors. No. Anyway, besides the point, is what it is. Here's where we are. Here's the issue. It happened back in January because I remember I had 3M during that time frame when that kerfuddle happened. Alright, so that being said, she drops here. Here's the bottom. Okay, the high was there, the low was there a year ago. Here we are now. What direction is it going? Well, plain to see, it's going to up direction. Okay, great, that's 3M. Been in business for over 100 years. Used to be a dividend king for 67 years. 67 years. Brainwave had to cut the dividend. I'm keeping it on my list. Okay? Nothing really happened to the company other than some stupid lawsuit that what's his name went into the profits and decided to pay the lawsuit out of the profits rather than figure out something else. Anyway, besides the point. Alright, so last 90 days. Clear to see. High, low, where was it, where is it, what direction is it going? And look at the chart, look at up, down, up, down, up, down, up, down. Easy to follow that. Simple. Last 30 days. Okay? Simple enough. Look. Up, got the high right there, got the bottom right there. Look, she's going up, now she's pulling back a little bit. Okay, so here's your current high, she's coming down, I'm waiting for the bottom. So I'm going to sit and watch and wait. I know you have a but. Why but expensive companies and have less contracts? Alright, I'm not 100% sure what you're talking about there, GutXM. I know you have a but. Why but expensive companies and have less contracts? Don't know what that means. When there are $20 stocks that can bring in 4 to 6% weekly, why buy? No, I know you have a list. Okay. There's not as many $20 stocks as you think. And a $20 stock doesn't necessarily mean you're going to get a higher premium. I'd like to hear what your theory is, though, and how that works. Because I'm always up for new ideas on how to improve the strategy. Okay, if I can get 4 to 6% per week safely and predictably, great, I'll do it. But what is the consistency behind it, and what is the methodology? What is the thinking? And does it consistently? How the heck did that happen? I'm bleeding and I don't know how that happened. That's weird. Yeah. So 3M, the dividend king. Okay, great. I like it. It has over one. Yeah, I'm taking a 1%. This is the movement it's making. That's what's what. And I'd like to know what you're talking about there. So yeah, I'm looking forward to our conversation. GD, Mara's at 19.85 cents at the end of the week. Great, yeah, I get that. To name one. Yep, Mara is on my list. But I think there was an issue with Mara. Hold on one second. Nope. M-A-R-A. Okay. See, Mara doesn't have any dividends. Okay. But I don't remember why we did Mara before. I don't remember why, but there was a reason. So let's go back to here. Mara, M-A-R-A. See, Mara at this moment in time is at 1950. 1950 is 85 cents. Okay, 80. Whoops, clear that. 0.85 divided by 1950 comes a grand total of 4.3%. Yeah, you're right. But here's the thing. When Mara goes down, what am I going to collect if she doesn't have dividends? Where is my safety net? Okay, there's no safety net with Mara. Okay, because what does it normally do? Well, let's take a look. Look, back in June, she went up to 19, dropped down to 8. What did I collect if I didn't collect any dividends? Nothing. Okay, from $8, she jumped up to 31. And then she dropped back down to 14 and a half. Then she jumps back up to 34. And then she drops back down to 14. Then she's back up to 23. There's no dividends there whatsoever, so I'm strictly relying on the premiums. And it has no dividends. Mara pays a fat premium and has actually been a good income generator for me for the last few weeks. Well, yeah, Mara is on the list. I think it was on, I don't know if it was on Warren Buffett's list, but I'm not 100% sure why we looked at it in the first place. But yeah, I did trade Mara sometime during the week because the numbers look good. And here, it looks like it's paying a 4%. Mara riot caused this week. Class this week? Mara riot, CLSK. I don't know what CLSK means this week. Okay, so a year ago, we were at 946. Bottomed out at 710 back in October. Okay, I don't know what CLSK means. Okay, topped out at 34.09, and now back in March. Okay, last 90 days. Okay, really easy to see. 90 days ago, down 14, up, down, up, down, up, down, up, down, up. Now it's coming back down again. Okay, so I have there's no fallback with Mara. It's either premiums or nothing. And there's no indicator of when does it normally go up. Because dividend stocks have a tendency to go up before the dividend date. Here, there's no indicator of when it's going to move other than price action. Price action is a totally different animal. Okay, you're just playing against your other traders. Okay, it's up. Yeah, it's going to be pullback. There's a pullback. Then it goes up again, and there's pullback. Up again, and pullback. And that's it. Don't matter if high cost corp is 1% on your dollar, is 1% as long as it's moving in the right direction. Michael, you're absolutely correct. You are. But that's what you call price action trading. So you're not trading with other than watching what other traders do. I'm looking at statistics and odds and probabilities. Okay? Now, the dividend stocks that I look at that are on my list, okay, I've been looking at them for years. They have a tendency to go up before the dividend date. Just forcing myself to take profits, but big move weeks are rough. Just trying to do dollar cost average when discounted. Hey, I understand. But it's that what you're talking about is a little bit different than what I'm talking about. Because I like odds and probabilities. Okay? If one of these stocks has gone up 100% of the time over the last 10 years coming into the dividend, more than likely it's going to continue that strategy, that move. There's a right word for it. I forget what it is. If it's done it consistently, more than likely it's going to continue to do it. Odds and probabilities. Yeah, I get that. Okay, thanks, you're welcome, whatever. Trend, thank you. Trend, thank you, yep. Momentum, yep. That's a pattern, correct. Okay, so if Hershey's stock goes up every single year from the 1st of February to the 7th of February in that time frame, every single year, why wouldn't I trade that? If, hold on a second. If Weight Watchers goes up the first couple of weeks of January, why wouldn't I trade that? All right? So if Mara has a consistency that does it every single year, predictably, all right, well, check that out. January 1st, December 31st, okay? The first week of September, she goes up. Okay, is that consistent? Does that happen every single year? Well, maybe it does. Look at here. From the beginning of November to the to Christmas, she goes up. And then what happens after Christmas? She drops. Well, is that consistent? Now, right here, there's no real consistency in the movements. But these moves right here, these are big. Look at those. Is that predictable? Is that consistent? Okay, I like odds and probabilities. If the odds are it's going to continue doing the exact same thing, look where we are right here. Okay, we're in the middle of June. From the middle of June to the end of July, it has a tendency to go up. Great. Well, I want to take advantage of that. Where are we right now? Okay, here's the little blue dot. Here's the next couple of weeks. Now, you really can't mistake that for anything else, because here's the blue dot. That's today. Okay? Has a tendency to go up. Great. I will jump in on it. Do you ever dollar cost average down, but then sell half against a lower price to get a better premium? Albert, I'm going to tell you something. You've been here long enough. You've heard this a dozen times. It's all about the numbers. Okay, so if I have 100 shares at this price, 100 shares at that price, and this price can give me a good premium and this one won't, I will think about it. But it's an overall. Like if I have 100,000 on an account and my goal is to make 1%, 1% of 100,000 is 1,000. Okay? If it was a $100 account, my goal is to make $1 because it's still 1%. 1% is 1%, no matter the way you look at it. So if I sell this here, and that gets me my 1%, when I couldn't sell both of them here to make my 1%, yeah, it's all about the numbers. So I'll take a look at the numbers and see what they're telling me. Because the numbers tell a story. Either I'm going to get my 1% for the week or I'm not. Okay, did I do it all the time? No. 4 times this year I didn't hit my 1%. But then again, maybe 15 or 20 times I made over 1%. So it all averages out in the long run. All right, where were we? So let's continue looking at Mara. So 90 days, up, down, up, down, up, down. Okay, here's your 90-day bottom. Here's your 90-day top. She's coming down at the moment. Let's take a look at the last 30 days. Last 30 days will be the 15th right here. Okay, she went up, pulled back, went up, pulled back, went up. Now she's coming back down again. Fine. Once she comes down, it stops, turns around. That's the time to jump in. So I'm going to put Mara up for next week. Okay, so I like that kind of movement, you know, because it's predictable. Okay, up, down, up, down, up, down, up. Now she comes to the downside. As soon as she finds the bottom, turns around. That's my personal indicator. You guys got to figure out what's right for you. Okay, I'm just showing you what I do. I'm not telling you what to do. Now you guys got to realize that I don't tell anybody what to do. I read the numbers, I read the charts, and I give you my opinion. I don't know nothing. I think it was Socrates say, all I know is that I know nothing. Okay? So, if you like Mara, great, do it. If you don't like Mara, don't do it. But what I can tell you is, if I buy it at 1949, I can sell the 1950s at 85 cents a share. So you have to ask yourself the very huge biggest question you're going to ask yourself. Do I like it? Do I want to own it? Do I understand what they do? Am I okay with owning it at that price? Not just the number, not just the fact that it's giving me 4% this week, but do I like Mara? Do I like it at this price point? Knowing that they don't pay dividends. They don't pay dividends. Okay? So it goes against what I'm talking about and what I'm doing. I own it and I'm selling the 2050s Monday at 2.2%. Secretariat, that's awesome. Okay? I think that's great. All right? But for me, it'd be going against what I'm teaching. You know, make sure it has 20 years of increased dividends. It doesn't have any dividends at all. Does it work? Yeah, it works. But you have to ask yourself that question. Okay, so we did 3M. Coca-Cola. Now, I don't know why you guys keep wanting to look at Coca-Cola, because I told you from the beginning, Coca-Cola premiums are absolutely horrid. Horrid. You know, horrid means bad. Okay? 62.51, the 62.50s will go for 45 cents. I don't think I've ever, me personally, I don't think I've ever bought Coca-Cola. Coca-Cola has never given a decent premium. They don't have to, because they are the king of the hill. They don't have to compete with everyone else. I think Pepsi gives a better premium, do you think? 163.99, going 65, so 162, 74, I can't really tell. 164s. Yeah. You give a better premium. Alright, so next on the list, AT&T we already looked at. Alibaba. Now just to let you know, I do own Alibaba in a different trading strategy. Different trading strategy in a different trading platform, the different trading goal. Okay, so I only share 2 accounts with you guys doing this simple, safe, predictable strategy that I taught my daughter. Now, Alibaba. I'm not a big, huge fan of this. Okay, so let's take a look. 73.41, 73 is 15 cents, and 74 is 65 cents. It's a big fat no. Why do I own it? I own it in different trading strategy, different trading platform, different strategy altogether. So it's got nothing to do with this. So Alibaba for this situation is a no. And take a look. Drop, drop, drop. Okay, the premiums don't really pay. So even if they did pay, she's in a downturn. I wouldn't look at it until it actually finds the bottom, turns around, goes back up. Okay, so that's Alibaba. Budweiser, really? I've never looked at Budweiser before. This is the first time I've ever looked at Budweiser. Anheuser-Busch. It's a no. Well, let's find out why. 59.95, so I want the 60s. The 60s go for 40 cents. Not your 1%. Look at this. Here's your high right here. Now she's in a free fall. And look at all the gaps. There's way too many gaps in Budweiser. Okay? So she's dropping. Look where we are now. 59. I definitely want to wait for a bottom for it to go back up. But there's way too many gaps. Because when you say gaps have a tendency to fill, look at there's so many of them. That's just way too many to keep track of. So Budweiser's a no. Boyd Gaming, BYD. Now Boyd Gaming, BYD, I have no idea really what they do. It's on Warren Buffett's list. That's the only reason why I'm looking at it. Someone suggested we take a look at it yesterday, and it is going to be a no, because they have monthly options. Now that's interesting. What do I mean by interesting? Take a look. Right now it's at 54.23. The 55s are going for 0. But look at the 50 puts. 8,200 contracts. And some think it's going down. Okay, you got 4,000 at 60 and 2,000 at 55. But most people, 8,000 contracts people thinking it's going down. That's an indicator. What do I think about Kroger? Simone, Kroger. Now, Simone, we looked at Kroger last night. I put it down on the list. We'll take a look at it. Probably won't get till tomorrow because it is 11:20. I do cut the time off at 11:30, so we got 10 more minutes. We might be able to look at one or two more. GILD. Ooh, was that Gilead? GILD. Gilead. All right. Gilead, 65.27. 65.27, 65.81. Take 27 off of there. 60, 50 something, yeah, not your 1%. Even the 66 is not your 1%. She's dropping down there. Ooh, look at that right there. Fridays. Let's see what Friday looks like. Okay, we see where our high is, our low is, where it was, where it is, and what direction it's going. Alright? So, a year ago, 78.83. Topped out at 87.87. Dropped down to the bottom at 62.07. That's like a week or two ago. Last 90 days. Okay, 90 days ago. Here's your high. Here's your low. Where was it? Where is it? Where's it going? Look. This right here. There's going to be profit taking on Monday. That's how by looking at that thing. Okay, last 30 days. Right there. Okay. Look at that big move on Friday. Okay. She gapped down, number one, and then she went up and she shot way up. There's going to be profit taking on Monday, more than likely. Okay. Is that guaranteed? No, but more than likely. Especially when you see the movements. Look at all the movements. Look at the size of this movement. Huge. Look at the size of this movement. What happened the very next day? Profit taking. What do you think is going to happen here? Profit taking. More than likely, okay, by looking at what the stock has done normally. Look at the movements, the average movements, okay? When you see a big move like this, very next day, look at profit taking. Very next day, more than likely, there should be profit taking come Monday. Should be. It's not guaranteed. Nothing's guaranteed. Death and taxes are the only guarantees in life. Okay. Well, we get time for, well, ooh, Apache, APE. Who came up with that one? AP. Wait a minute. APA group. Is that right? APE. APE? Really? Has no options. Okay, that's a no. CVX, which is Chevron. CVX. Chevron. Gotta love Chevron. 152.50. Uh-oh. Does anybody see that? 152.57 was the last trade. 152.38, lower. 152.50, lower. Both of them are lower. What does that mean? It means the market maker is pushing it down. Well, it's pretty consistent in the trend that's at the moment. So why is Chevron going down when all the other oil stocks are going up? Why is that? I don't know. Well, let's take a look at the numbers. The 152.50 is 157. It's over 1%. See that? 152.50 to 152.50 is going for 157. That's over 1%. Spotify. All right, good. Good XM. Spotify doesn't have 20 years of increased dividends. It's going to be a no. COO been going down too. COO. COP. Okay. COP. We'll take a look at that. But let's take a look at Chevron. First thing we want to see, there's the high, here's the low, here's where it was, here's where it is, where's it going? Smidge to the downside. Smidge. Not huge, but just a smidge. Now, it looks bigger than that. But when you look in 5 or 10 years from now, where was it in 2024? Well, it was at 157, 152, so right around the 155 area. They're going to gloss over all of this crap. Say, where was it? Well, it was at 152. Alright, so a year ago, 157.99, topped it all at 171.84, and that was the end of September. From there, she drops to a bottom of the year at 139. Okay, jumps back up, got a double high at 166, back to where we are at the moment, 152.57. The last 90 days, right there. Okay, 90 days, take a look. High, low, where was it? Where is it? What direction is it going? To the downside. Okay, that's where it was 90 days ago, is where it is. Going to the downside. Right? Up, down, up, down, up, down, up, down, up, down. Where do you think it's going to go next? As soon as she finds the bottom. Look, 1, 2, 3, 4. 4 down days in a row. I love 4 down days in a row. I'll keep looking at it to find out when it finds its bottom. So let's look at the last 30 days. Here we go. Okay. Your 30-day high, your 30-day bottom. What's going to happen after it finds the 30-day bottom? It's going to turn around and go back up. Well, what else do they do? You got 4 days to the downside. Okay, 4 days to the downside. Great. 5 days to the downside, 6 days to the downside, 7 days. I really honestly don't care. As soon as it finds a 30-day bottom, great. And then it finds a 30-day bottom and then turns around and goes back up. That's why I'm going to write this one down because I like CVX. I do. It's on my list. So I'm putting it down for next week. We keep our eye on that one. Okay, that's going to wrap it up for tonight. It's 11:30. Wonderful Saturday. Do you ever do covered calls on Tuesdays? Hello, Jennifer. Every once in a while I will. Not normally though, because on a Tuesday I only have 4 days of option premium. 5 days of option premium is more than 4 days. So the value on a Monday is 20% higher than it is on a Tuesday. Because if you think about it, you know, 20%, 20%, 20 minutes, 20, 40, 60, 80, 100. By Friday, it's worthless. So, Monday, you lose 20%. Tuesday, you lose 20%. Thursday, Wednesday, Thursday, Friday, it's all gone. Next week, only 4 days of trading. Really? I didn't know that. What's next week? Oh, the 4th of July. Wait a minute. Is that right? It's the 17th to the 21st. Okay, so what am I missing? What's coming up on the 17th to the 21st? Albert. Anyone? Anyone know why we're having 4 days next week? Juneteenth. What the hell is Juneteenth? Seriously. What is Juneteenth? What the hell does that mean? And what day is it? Google it, really? You're not going to tell me you're going to make me Google Juneteenth. Juneteenth, National Independence Day. That's July 4th, National Independence Day. Flag Day, Wednesday, the 18th. Juneteenth, officially National Independence Day, is a federal holiday in the United States celebrated annually on the 19th to commemorate the ending of slavery in the United States. Alright, whatever. It is what it is. So next week we have 4 days. Alright, so all that being said, this is James from Dividend Stock Talk, brought to you by the 10-Minute Trader, where I invest in dividend stocks for weekly cash flow. You guys have a great day, and we will see you tomorrow night. Happy Father's Day, James. The same to all you other fathers. Secretary, you have a great day. That's ended. And now, post for 30 days. share. We're going to share. Investing in dividend stocks for weekly cash flow for a safe, predictable, and consistent 1%